Alrighty, today is Friday, June 18th, 2021. Today we had a pretty easy textbook sell on gold. Um, as we can see here, Wednesday we had the FOMC push down, we had a retracement, and then yesterday we had a continuation downwards, followed by a bullish retracement during the late New York session and during the Asian session. We also had a push up at London Open. After this push up in London Open, we consolidated for a few hours until New York Open. Now, this consolidation is what we love to see on gold, especially consolidation that respects the same support and resistance so strictly. So here we had one, two, three, 4 times this level was respected very strongly, and a few more times just above it a little bit. Same as up here, we had multiple tests of this resistance. We even had a breakout at 5:30 that ended up strongly rejecting and closing back below this, telling us that these two zones are very strong zones. So we're going to need volume to break this. So after that, we start thinking, all right, so how will I take an entry if we break one of these zones? So we look left here. If we break down below here, very clean traffic. We see that candles did not have any issue traveling through this area. The only place that had a bit of issue was right here. This resistance and where this candle started. So this could be a place to take your first profits, but that's 30 pips away. So we knew that we had at least 30 pips of very clean traffic. And that's on all time frames. Every time frame we look at, we had that clean move to continue downwards if we broke this zone. So I started monitoring these lower time frames. As you can see, the 15-minute in one candle dropped all the way down, which was 150 pip 15-minute candle, which is insane. That was shortly after NY Open. So the way that this trade was executed is, at first I was looking for closes. So if we come down to the 5-minute, to be more specific, I was hoping to get a 5-minute close originally. Now what ended up happening is right here you see 8 o'clock, we had this strong bearish push down after rejecting this resistance. We had another continuation down, closing bearish with a rejection, and this candle, and even a bit in this candle that I just said, you could tell that there was a lot of volume. So not only could you tell it was there a lot of volume, but it was in fact a time where there would be a lot of volume, which is New York Open. All these candles, as I was watching before this trade, they're very slow. They go up a bit, retrace, go up a bit, it was very slow moving. Then when we got to New York Open, the candles were jumping. They're going boom, boom, going up and down really quick, moving very quickly to push down, reject. So that confirms us like, whoa, there's a lot of volume in these candles. So when I started to see that, especially with this rejection and this rejection, I decided that once we broke these lowest wicks, I would be taking an impulse entry. And what I did is I actually set up a sell stop below this lowest wick, and that's where I got entered. If we go down to the 1 minute to see more specifically how this played out, you can see more confirmations. We had this push down happening during when New York Open happened. We had a retracement, which is perfect. We love to see this because that's perfect structure. We had our push down, we had a retracement, we had resistance formed. We continued breaking down. This low got broken, the support. Continued. A strong bearish candle closure, a rejection with a bearish candle, closing just below our zone. And this is exactly where I got entered. And after that, it was pretty quick moving. We pushed down. How many pips was this when I got entered? We pushed down in 3 minutes. In 3 minutes, we were already up about 15 pips. And then after that, it just started dropping. This 1 minute candle right here dropped down almost 50 pips in 1 minute. So yeah, this was a phenomenal trade. Textbook trade. Really not that difficult. The only thing that was difficult was being careful. Where are we here? Being careful that we. Oh, we're back up here. Being careful that we don't get faked out, like what happened here. Even though here would have been a decent trade if you got out in time. That was the only difficult thing, making sure that we didn't get faked out, because I didn't want this to break and then reject. So that's why originally I wanted to close. But like I said, once you start seeing there's volume, once you recognize, okay, we've been ranging all of this time, none of these candles were able to break like this zone in general. There's one candle that came down here. That was it, but the rest stayed above here big time. And since I had been watching the charts for a couple hours at this point, I also knew like these candles were slow moving, and that's why they weren't able to break this. Was because they were so slow moving, because there wasn't a lot of volume in them. Here, we're jumping up and down, jumping. We're having rejections, upward rejections. We had this retest with a strong rejection. So this is telling us that, you know what, an impulse entry might be acceptable here, especially with this clean traffic. Even down on the 5 minute, we have pretty clean traffic. We had a little bit of issue here, but again, this is the 5 minute. But besides that, it moved pretty smoothly through this zone. And as you can see, the 5 minute candles were just ridiculous. So yeah, that's how the entry was taken. The sell stop was placed. This range, we knew when the harder it ranges, the longer it ranges, the harder it breaks, and that played out perfectly today. And then if we look what happened later on, and where I took my take profits. My first profits were taken. Where was that level I mentioned? Thought there was more right here. I had my first take profit right here. So where this rejection occurred, where this candle started, this was kind of the area where this resistance is from. So this old resistance. So I did take some profits here. And if I remember correctly, yeah, it had no issue continuing past that. So I did take profits somewhere in this area, but more of my position continued down. And I took most of my profits right here once we came back down to this major support. I did have a small runner that continued on. I took profits somewhere in this area here, but most of my position was closed out here, which was about 75 pips in 2 5-minute candles, which is absolutely insane, obviously. So that was great. Later on in the session, we did continue down more, like I said, where I closed my runner, and then it started to get a little bit uglier. Lot of big wicks. Price wasn't really sure if it wanted to retrace up more, continue down, and it was just wick city after that. Even at NYSE open, not much happened, just wicks like crazy. We'd had one little push up here, but it would have been very messy trying to catch trades. Really, besides this potential move, it would have been very messy catching trades here. So I was very glad to catch this, and after this, obviously, I called it a day, called it a week. It was early. It was only 8:20, 8:30. But that's a good time to call it a day and call it a week. Once you get this move, the market gave you your opportunity, the market gave you your money, now get out. The other thing to take note of is there's times where I do miss this. There's times I do miss a massive move like this. Whether that be I'm not on the charts, or not paying attention to the charts rather, or I hesitate, or I mess up my entry. A practice that I've been working on lately as someone who's still, in the earlier stages of my trading journey, is when I get an opportunity like this and I miss it, I'm done. Because no matter how much you tell yourself that you will not revenge trade, that you're going to keep your mind in check, especially someone who's still in their, like I said, the beginner stage of their trading journey, I found that you will end up revenge trading, and you won't realize you're revenge trading until after you take a loss. Reason being is, if I missed this trade, I would have been pissed. I would have been so disappointed in myself that I missed out in such an awesome trade, such a textbook trade. that I would have been trying to take trades down here. Trying to take trades down here very likely would have ended up very badly for me, obviously. So that's why in situations like this, if I miss a trade, you know what? The market gave you your opportunity. I was here. It happened during the time that I trade. It was my textbook setup. It was in my trading plan, and I did not execute. That's fine. It's okay. Learn from it. But that's it for the day. Yeah, that's a skill that I've been trying to um, get better with and try to implement into my daily trading plan that I thought I would share with all you guys, because it's been very helpful to me, and today's a prime example of how it saved me. Because if I did miss this trade, or how it could have saved me, if I did miss this trade and was disappointed in missing this, I would have been, oh well, it's only 8:30. You know, there's gonna be other opportunities today. Would have been disgusting trying to catch trades here. And instead of just accepting that I missed this trade and ending the day break even, I would have messed around and probably taken losses in here. And after that, I would have realized, wow, I took these trades because I was mad about missing this. So it's all about being self-aware and conscious of, of what you do. Anyways, that's it for this week.